Wall Street just gave Bitcoin the one thing it's been waiting for: legitimacy. With ETFs approved and Bitcoin smashing past $124,000 in 2025, the question isn't if it wins, but how big it gets before the decade is over. This isn't another price prediction video. It's the story of why Bitcoin keeps breaking records while every attempt to bury it fails. We'll trace its journey from shadowy beginnings to Wall Street adoption, uncover the crises that almost destroyed it, and reveal why some of the most powerful investors now call it the most important asset of our time. Stick around, because by the end you'll understand why Bitcoin could define the 2020 the way oil defined the 20th century. It all started in January 2009. The world was reeling from the worst financial crisis since the Great Depression. Banks collapsed, people lost homes, and trust in the financial system was at an all-time low. Out of nowhere, a mysterious figure, or maybe a group, calling themselves Satoshi Nakamoto, released a white paper, Bitcoin, a peer-to-peer electronic cash system. It sounded nerdy and boring, but inside was a radical idea. Money that no government could print. It was like inventing the internet, but for money. At first, nobody cared. The first Bitcoin transaction, a guy named Laszlo Hanyek traded 10,000 Bitcoin for 2 pizzas in 2010. At today's prices, that's billions of dollars for some pepperoni and cheese. But back then, it was just digital play money. The early years were rough. Bitcoin had no value, no legitimacy, and almost no users. Critics laughed it off as nerd money or a Ponzi scheme. Even Nobel Prize-winning economists called it fool's gold. And there was another problem: Bitcoin's dark side. Criminals on the Silk Road marketplace used it to buy drugs and weapons. That gave Bitcoin a reputation as the currency of crime. In 2013, when the FBI shut down Silk Road, many predicted that Bitcoin was finished. But here's what actually happened. Instead of dying, Bitcoin survived, and every time it faced an attack, it grew stronger. By 2013, Bitcoin had climbed past $1,000. Excitement was sky high. But in early 2014, disaster struck. Mt. Gox, the biggest Bitcoin exchange in the world, suddenly went offline. The truth was devastating. Hackers had stolen 850,000 Bitcoin, worth around $450 million at the time. Investors panicked. The price of Bitcoin collapsed by more than 80%. That should have been the end. But again, Bitcoin didn't die. It limped forward, scarred but alive. And this resilience started to get people's attention. By 2016 and 2017, Bitcoin wasn't just a toy for internet geeks anymore. Wall Street started to notice. Hedge funds dipped their toes in. Big names like Fidelity began exploring it. And then came the bull run of 2017. Bitcoin exploded from under $1,000 to nearly $20,000 in just 1 year. Overnight millionaires were born. Media headlines screamed Bitcoin bubble. And just as quickly, it all crashed back down. But here's the twist. Unlike the dot-com bubble, Bitcoin didn't go to zero. It didn't vanish. Instead, every crash set the stage for an even bigger rebound. To really understand why Bitcoin might be the most valuable asset of the decade, we have to zoom out. The problem isn't just Bitcoin. It's the money system itself. Governments can print unlimited amounts of money. Central banks can lower interest rates, create credit, and pump liquidity into markets. That works until it doesn't. Between 2008 and 2020, the US Federal Reserve printed trillions of dollars. And then came the COVID-19 pandemic. In 2020 alone, about 20% of all US dollars in existence were created. Think about that. 1/5 of all money ever printed in a single year. That kind of money printing devalues savings. It's why a dollar today buys less than a dollar 10 years ago. For the average person, it's invisible inflation. But for those paying attention, it's terrifying. Bitcoin offered an alternative, a currency with a hard cap of 21 million coins. No printing, no central authority, pure digital scarcity. In 2020, something shifted. Legendary investors who once mocked Bitcoin began changing their tune. Paul Tudor Jones, one of the most respected hedge fund managers, called Bitcoin the fastest horse in the race against inflation. Stanley Druckenmiller, Another billionaire investor admitted he owned Bitcoin and believed it had staying power. MicroStrategy, a public company led by Michael Saylor, converted billions of dollars of its balance sheet into Bitcoin. And in 2021, Tesla bought $1.5 billion worth of Bitcoin, sending shockwaves through the financial world. Suddenly, Bitcoin wasn't just a rebel currency, it was an institutional asset. But let's be honest, Bitcoin is still insanely volatile. It's not unusual for the price to swing 20% in a week. In 2021, Bitcoin soared to $69,000, only to crash back below $20,000 in 2022. That volatility scares investors. How can an asset so unpredictable become the most valuable of the decade? Here's the answer. Volatility is a feature of early adoption. Amazon stock once fell by 90% during the dot-com crash. But today, it's one of the most valuable companies in history. Bitcoin's wild swings are the growing pains of a new asset class. The true test came in 2022 and 2023. Inflation hit record highs around the world. Banks in countries like Lebanon, Argentina, and Turkey collapsed or restricted withdrawals. People suddenly realized when banks fail, your money isn't safe. And what did people turn to? Bitcoin. In countries with unstable currencies, Bitcoin wasn't a speculative gamble, it was survival. It became a lifeline for families trying to preserve their savings. At the same time, regulators tried to crack down. China banned Bitcoin mining in 2021. Politicians in the US called for stricter rules. Yet Bitcoin kept going. The network simply moved mining operations to other countries. You can ban Bitcoin in one place, but you can't ban math. By surviving attacks from hackers, governments, and markets, Bitcoin proved its resilience, and that resilience was rewarded. On December 4th, 2024, Bitcoin crossed $103,000, giving it a staggering market capitalization of nearly $1.9 trillion. Then, on July 1st, 2025, it shattered records again, hitting an all-time high above $124,545, driven in part by the approval of Bitcoin ETFs in the United States. Just as earlier surges were tied to Tesla's bold buy-in and Coinbase's historic listing, these milestones cemented Bitcoin's role as more than just a speculative asset. It became a system-defining force that even governments and Wall Street could no longer ignore. Why Bitcoin will be the most valuable asset of the decade. Here's the case. Scarcity. Only 21 million Bitcoin will ever exist. Compare that to trillions of dollars being printed every year. Adoption. Every crash brings in more long-term believers, from retail investors to billion-dollar institutions. Decentralization. No CEO, no government. No company can shut it down. Digital gold. Gold has been humanity's store of value for 5,000 years. Bitcoin is faster, more portable, and easier to divide. Generational shift. Younger generations trust digital assets more than banks. For them, Bitcoin is the default. That combination makes Bitcoin not just an investment, but potentially the most valuable asset of this decade. The story of Bitcoin is a story of survival. From pizzas to Silk Road, from Mt. Gox to Wall Street, from government bans to trillion-dollar valuations, Bitcoin has faced death more times than any other asset. And each time, it's come back stronger. The ultimate lesson? Bitcoin is no longer just an experiment. It's a mirror reflecting our broken financial system and a preview of what money could become. Whether you're a believer or a skeptic, one thing is clear. Bitcoin isn't going away. And in a world drowning in money printing, it just might be the lifeboat everyone's scrambling to get on. If you want to see how Bitcoin's story connects to the rise of Ethereum, watch the next video that's about to pop up.